It's day one of the Fed meeting, and joining us now is the CEO of U.S. Global Investors, Frank Holmes. Frank, good to see you again.
Great to be with you.
So before we dive into questions here, just want to bring up an interview you recently did with BNN. You were on and with someone who's quite bearish gold. I know you are and have been bullish gold. So what do you say to the naysayers right now with the level gold's at?
Well, there's two types of investors, those that are 100% gold bugs no matter what, and those that are 100% don't touch gold. And I think that I've always been the partial, saying having a 5% in bullion, gold coins, and 5% in gold stocks, and rebalancing. And this is a person that has zero in gold, and he's missed one of the greatest moves in gold. And I think he just tries to justify by attacking someone else that he's smart. But many of us investors are disappointed he never caught Barrick, he never caught any play in gold, and negative interest rates like what's taking place today in Germany.
All right, so let's look at numbers now. As we speak, gold is above 1280. Where do you expect and how do you expect the metal to trade here, especially post-Yellen?
Well, I think there's two volatile things, and you're seeing that in the VIX index, and one of them is what will happen with interest rates. There's still people speculating they're going to go up. But the math says they're not going to happen. What's interesting is 3 weeks ago, it was a 50% probability of July rates were going up. And now you have to go to February of next year, according to the Bloomberg system of people guesstimating that rates will go up. So I don't think you're going to see rates go up, especially when you see these negative PMIs. And you see what happened in Germany today when the 10-year government bond is zero interest rates.
And I want to get back to that in a second. But most people are not factoring in and don't think that we will have a rate hike in June and July. So you agree with this?
Oh, absolutely. And I've been saying this all along on your show. And so now it's starting to prevail that the global economy is very fragile. Numbers out of China, there's nothing sustainable. It's showing up in Europe. And then Brexit, I think that's the big issue for the next 10 days.
Okay, and big news of the day, you mentioned it before, 10-year German bond yield fell into negative territory for the first time in history. What does this do for gold?
Well, I think it's very constructive and positive for gold as a great asset class, and that investors should have a 5% in bullion, in particular gold wafers and coins and silver, and 5% in great gold stocks. The market's been flat, but your gold stocks have been up spectacularly well. So your overall fund performance this year is over 20% for bullion and 80 to 120% for gold stocks. That is a great opener year to date.
Were you shocked by the news coming out of Germany?
I was surprised it came out before the whole Brexit stuff, but it just goes to show there's other weaknesses in the global economy. And I think that China is the big issue and the big risk right now because everything they've done is not getting global traction.
All right. Good thoughts, Frank. Thanks so much for joining us.
Stay invested in gold.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.